We've spoken recently about other companies that have laid off employees, and Amazon is no exception. Those of you that follow me, you know that I'm a big investor in Amazon. It's my second largest position, making up 22.4% of my portfolio, and I intend to hold this company for the long term. Now, they just announced huge layoffs, 10,000 employees to be exact, and in Amazon's history, this would be the largest layoff that the company has ever done. Now, in this video, you might be looking at this headline article, and you might be saying, oh my gosh, Jordan, this company, it's going downhill. And while the company may be putting up record revenue and honestly pretty bad profitability, this may be deriving from this excessive employee cost. We're going to talk about in this video, is it coming from these employees? We're going to look at specific expense segments like G&A, S&M, CapEx, and R&D, and talk about which one of these categories, in my opinion, is hurting Amazon the most. Amazon has been losing money in 2022 and needs to get back to profitability, and so far throughout the first 9 months of the year, it's lost around 20-30 billion or so just in the first 9 months, just in 3 quarters, which is crazy for a company of Amazon's size. And then finally, what we'll cap off with, we'll talk about the size and scale, and just to give you an example of 2 recent deals that Amazon just recently closed out with. It's one with Hawaiian Airlines and their agreement to make their new aircraft and their basically free call option that they got for the company, and their stake that they just acquired over 50% of for an India-based e-commerce business. So it's going to be a fun one. Stay tuned. As you know, I'm Jordan. I'm a millennial investor, and if you haven't seen me before, my portfolio is around $44,100 as of the time of me starting. And then we also have my performance right here, which we also have lined out in my Excel spreadsheet, which this is my balance since starting YouTube back in April of 2020, my holdings, which I already showed at the beginning of the video, my performance compared to the indexes at the beginning of the year, updated every single month, my monthly YouTube income, my lifetime YouTube income, and then of course, if you want to see these holdings, if you want to look at my investments, we share this down below in the description, which you can take a free look at. This brokerage, all these little charts that I'm showing you, all this cool stuff is shared down below through the brokerage and powered by the free opportunity to sign up with M1 Finance. You can get signed up and get a free $10 by using this link down below in the description, and 133 people have done so far. So thank you guys for tuning in, and without further ado, let's go ahead and get into Amazon. Now, Amazon has decided to lay off 10,000 employees. Now, the reason why this is important is that they're not only laying off 10,000 employees, but they're laying off 10,000 specific employees. The devices organization, the retail division, and human resources are the 3 main departments where they're laying off from. Now, the interesting part is that while this represents less than a 1% of total employee layoff from its global workforce, it's 3% of its corporate employees. So the thing is, it really seems like Amazon is focusing not on dialing back employees, but dialing back costs. Because if they were lowering demand, they would really be laying off its warehouse workers. And typically its warehouse workers are making something like $15, $20, $25 an hour in most cases, and a lot of their corporate employees are making $100,000 plus. So the thing is, if you take $100,000, multiply it times 10,000, that's $1 billion in cost a year. So it's very easy that these new layoffs is going to save Amazon somewhere in the range of $250 million a quarter. And if you look at their most recent G&A expenses, which stands for General and Administrative if you're not aware, in the most recent quarter, it is $3.06 billion. This has skyrocketed. If you look at this versus a year ago, if you look at the third quarter of 2021, it was $2.15 billion. This has grown almost 50% in a 1-year period. Cost has skyrocketed from raising rates, from raising salaries, from higher input costs, from hiring on new employees. They've hired on a ton of new employees. And then as you can see across the board, it's not just G&A. If we tack on S&M, if we tack on R&D, CapEx, and basically just overlay all the expenses in general, you can see how things have really started to pile up. So I think it's smart for Amazon to finally start to be, delaying on raising these costs over and over again, because while the revenue growth has been stellar, it has been growing at an excelling pace as well, it has been growing at a slower rate compared to that of the expenses growth. Because if you look at the revenue, it's only gone up 14.7% over the last year. And just like we showed, the G&A, the General and Administrative, has grown almost 50%. This is part of what's led Amazon to have some negative free cash flow at around $30 billion or so in the first 9 months of the year. And I'm not sure if this will turn positive in the fourth quarter. I think 2023 will be a lot better. 2024 will likely be much better. But in the meantime, this company is actually a money loser, which is crazy to think for a company of Amazon's scale. Speaking of scale, that's the second part I wanted to talk about. And this leads me to the issues why you should not be worried. There are two main reasons why you should not be worried about this layoff if you're an Amazon investor. Is for two reasons. The first one is that this Amazon layoff situation is only a fraction of the employee workforce. It's less than 1% of all employees. So this is honestly, it's a rounding error. It's so small, it's not even really worth mentioning. It's more for news, clickbait headlines. It's not really going to affect the business in a major way. Really, they would have to lay off like 100,000 for it to start being impactful to the actual business. Now that's the first reason why you shouldn't be worried in my opinion. And the second reason, it leads me to this article. Today, the stock market finished up in the green, and it was a little bit higher, just like with Amazon. Amazon finished up 45 cents, or about 0.46% today, and this leads this company into a $1 trillion valuation again that it's been throughout the past week or so. And it's been under $1 trillion for a while now. To see it get back over $1 trillion is a good thing. Now, why am I bringing up valuation? Why am I talking about $1 trillion businesses? Well, when Amazon is at the scale that it is, it has opportunities to negotiate deals that no other companies can. This is why you saw me invest in small cap growth companies and transition more towards large cap dominant businesses. And let me give you an example. One of the reasons why I just bought Google. Google is my newest position in the portfolio. If you look at the balance sheet of Google, you can compare the cash versus debt, and you can see that the net cash position of Google is over $100 billion. Do you know how much power you have when you have $100 billion in cash just sitting there, ready to go, waiting to be deployed at any moment to buy out other companies, to take stakes in businesses, to reinvest back into yourself, to buy back stock, to pay dividends, to do anything you want? When you have $100 billion on the balance sheet, you have a lot of power. Now with Amazon, when you're the largest revenue business on the planet, that gives you a lot of power. This company does $127 billion of revenue a quarter, and it is growing every single year. Next year, we should be breaking $500 billion, half of $1 trillion in revenue, and it gives them opportunities to negotiate deals like this. It says Hawaiian Airlines announces agreement with Amazon to operate freighter aircraft, and the more important part of this is not the aircraft. It's the terms that they negotiated alongside it. You see the section that I highlighted here in blue? In connection with the commercial agreement, the company issued Amazon warrants to acquire up to 15% of its common shares. The warrants are exercisable over the next 9 years. Now, I'm not a super bullish person on Hawaiian Airlines. Honestly, I don't really care what the company does. To be honest, I'm not a big fan of them. However, the cool part about this business is that it gives Amazon essentially a free call option. Right now, the stock is around $15. I don't know if the company's going to go higher or lower, and I'm not going to try to assume which direction it's going to go. However, let's assume that this company does one of the two things. If it does bad, then okay, great. Amazon still has its partnership. It still has great negotiating power with Hawaiian Airlines to manufacture these products. And if it goes up, if the company is successful, starts going up in stock price, say if it goes to $20, $25, $30, $40, then Amazon gets to buy a stake at ridiculous prices and basically gets free money up to 15% of the company's value, which as of today, the market cap currently sits at around $768 million, so they could buy about $100 million or so of the company. That's essentially like a free call option. And it's these type of opportunities that many other companies don't get because they don't have the money, the size, the scale, or the power that Amazon does. And it's ones like these that I see all the time. I see Seeking Alpha articles like this, it seems like every single week. Amazon seeks a 51% stake in India-based logistics solutions provider Ecom Express. Now, it talks about how they're going to invest somewhere around $500 to $600 million in the business, and how they're currently taking a majority ownership stake, and they're going to get all the logistical network, the warehouse space, and all their technology for investing in the company. Now, I don't care about Ecom Express. It's not a business I'm interested in, and it's much smaller than Amazon, but they can buy out a $500 million business like it's nothing. It's a rounding error. Same thing with Google and with Amazon. You can see it, the balance sheet is insane. Even with this company having a lot of debt, they still have a huge cash pile. And while it's gone down significantly in 2022 because of the losses, was, they still have, even with it getting cut down dramatically, still have $58 billion on the balance sheet. And I think that these free cash flows that are currently negative are going to be turning positive very soon in 2023, 2024. And that's going to give them a lot more leverage and a lot more buying power into opportunities like these agreements with Hawaiian Airlines, like these agreements with Ecom Express. And I think that overall, Amazon is heading in the right direction. So when I see reports like this, 10,000 employees being laid off by Amazon, a lot of people invested in the company might start to get worried. They might start to say, oh my gosh, the company's not growing anymore. They need to cut costs. They're worried about investments in the future. They're worried about their long-term opportunities. But for me, I'm sitting back, and I'm excited about the growth opportunities. This company is invested in so many different categories, and as I've showed this before, my little spreadsheet that I have here with Amazon, there are so many different sections that Amazon is invested in. And just look at some of my notes, and if you want to read this, you can pause it, but there's so many different things that Amazon is doing at pretty much all times that is growing the business. Whether they're buying out part of the NFL, whether they're getting new AWS customers like Verizon, or the NHL or Delta Airlines, or this company is investing in new robotics products that they released in 2022, or raising their Prime membership prices while getting new customers. You see it across the board. There's a million things going on with Amazon, and pretty much are all towards a growth trajectory and getting more profitability for the long term. So easy for me, when I look at this report, I don't really change my opinion. I say, okay, they're cutting some costs, which they probably should be doing because costs have skyrocketed over the last year or so. And I think that this is likely a smart move by Amazon, by the CEO Jassy, and just for good for shareholders in general. So I'm not worried, and I'm going to be holding my shares, as you can assume, not only throughout 2022, which we have about a month and a half left, but likely throughout 2023 and beyond. Thank you guys so much for watching, checking out all the stuff down below in the description if you haven't already. But without further ado, my name is Jordan, I'm Millennial Investor, and I'll catch you guys next time.